Hello traders and welcome to today's show from Quality FX Trading. In today's lesson, I'm going to discuss about the importance of top-down analysis and how this concept can help you to become a successful trader. This is a very important topic, so please pay attention to this lecture. It is about top-down analysis, and here the higher time frame is the weekly chart. You can have the monthly chart as your first higher time frame, but what I'm considering in my strategy is going to be the weekly and daily. So right now we are in the weekly chart, as you can see, and I'm going to show you the example that we are going to discuss about in this lesson is going to be the pair of pound dollar, as you can see. So this is a weekly chart, and we are going to show you how you can do the top down analysis. It means you start from the higher time frame, and then we go after weekly, we go to daily chart, and then we go to the trading time frame, which is going to be our H1 time frame. And the H1 time frame can be our trading time frame, and the entry time frame can go into the shortest time frame that we have here is going to be the 5-minute chart. So this is going to be very interesting lecture, and please don't forget that the top-down analysis has to be run in every week. So your job during the weekend before starting the new trading week, you have to sit on your chart and do a proper top-down analysis as the price action is getting updated week by week, especially in the higher time frame. So the big picture can change, especially the weekly and daily chart, which is our analysis is going to be based on. So here let's talk about the weekly chart in the pound dollar, and as you can see, overall this the direction of the market in the pound dollar, if we see, is to the downside. Here let me just put some indicator for you so you can see which point exactly I'm talking about. So as I said, the direction of the market is to the downside. As you can see here, we have the point in the chart which is after this point, it is going to the downside. So here, if you can see, let me talk about this structure. This is a market structure. So you can see from here, this one is going to this low, and then again it's going up to this high, and you can see the previous high is not broken. So this high is lower than the previous high. That's why we call it lower high. And then again it goes down, it's breaking this low here and it's creating another low. So that's why we call this lower low. So we have the set of lower highs and lower low. So that's why we call this market bearish in the weekly market structure. So now This was the previous high, and now definitely we are not expecting this high, which is highlighted by this arrow. We are not expecting this high to be broken. If this is going to be broken in case, which is definitely is not going to happen soon, even if it wants to happen, because consider that this is a weekly chart, then the market structure can happen. So until then we are still bearish. Okay, in this bearish market, what we are looking for, we are looking for some sort of manipulation to the upside, or going back to the fair value gap, taking the liquidity, going inside the uh, kind of void, and then it's coming down. So here we have this kind of manipulation. So you can see the weekly chart, it went up and then it is breaking this. Just 1 minute, let me show you here exactly what's happening. Sorry for the little bit delay, I'm not sure the chart is a little bit slow today. So here you can see this high is getting manipulated by this price action. This is a manipulation, and don't think that this is a buy. In the long run, this is actually the perfect spot to sell. So that's why here, if I put the price, if I leave the arrow here and just show you by a horizontal line, you can see here, exactly here, we have that fair value gap. Let me just zoom in to make it clear for you that how we manipulated, I mean the price action manipulated those actually sellers, and now price came up. Okay, it came inside this fair value gap by weekly, the orange line, and inside this fair value gap we can see the reaction. Now to prove this reaction, I want, after this understanding of the overall picture, you can see the market structure is bearish in the weekly, and how the price action manipulated to the upside. It came inside this fair value gap, which is the horizontal line of the orange color, and now I want to move to the lower time frame, which is the daily, and this is the way that you do the proper top-down analysis. So now we can see that orange line, which was the fair value gap in the weekly chart, and you can see how perfectly here the daily price action rejected exactly from that area. And now market structure shift is happening in the daily chart as well. Let me change the color to our color code in daily, which is the blue. So we are using orange for weekly and blue line for all those daily things like fair value gap or order block. So here we can see it created this bearish order block, as well as this bearish daily fair value gap. So these two lines are important, and as you can see, let me just grab that indicator again, so to show you here, exactly here. Okay, the daily candle, you can see, got rejected from that weekly level, and 1, 2, and 3 days to the downside, and it broke this short-term low. So we call this the proper market structure shift in the daily time frame, considering the rejection, displacement from the weekly level to the downside, and the fair value gap and the bearish order block which is created together. So when we have this important strong bearish order block to the downside and the fair value gap which is created in the same level, then that shows that definitely we are heading to the downside. So don't forget the title of this session. It is about the proper top-down analysis which can lead to success in trading. Why we are talking about successful trader? Because if you do this kind of analysis, at the end you will reach to a point that most of your trades are going to the correct side of the market, because what you have done was proper and correct. So now you can see after that, let me just zoom in more. You can see here, exactly here, the market price action is coming back up inside this fair value gap and is, even you can put this bearish order block exactly at this low, but it didn't touch that. Okay, we can see that bearish order block was not touched, but the fair value gap got touched and price came inside that fair value gap. Okay, and now at this stage I want to pay your attention to the 1 hour chart. So we are done with the weekly and daily time frame. We got the big picture and the whole scenario which is going to be bearish, and in the daily time frame we know where exactly we are looking for bearish or sell setup. Okay, so now this is the 1 hour chart. Okay, so the arrow here is going to be here. Okay, and see how perfectly the 1 hour chart is coming inside this fair value gap and then pushing to the downside, again breaking this low. So in the 1 hour chart our color code is going to be pink. Please pay attention, this is going to be very interesting. If it is new thing to you, don't forget to go to our library of videos and watch other videos to learn more, and then also repeat this video to master this concept. Definitely in 2023, when I want to talk about our strategy, our unique strategy which is profitable, then you're going to be surprised if you don't know about this kind of things. So these lessons are kind of prerequisite and preliminary stuff for you to get ready to get into 2023 and start trading with us with our profitable strategy, which I'm going to discuss it in January 2023. And don't forget and wait for that, our live session is going to start as well. So here, back to the chart. 1 hour chart, you can see price is pushing to the ups to the downside. Okay, again it's creating this fair value gap. Interesting, right? Isn't it? So the pink line, the horizontal line, is showing that fair value gap in the 1 hour chart. What price is doing? Price is going back inside. Look at this wick, this candle wick. Isn't it nice how perfectly it's going inside that fair value gap? This is the fair value gap, right? Let me put this one also, right? This distance is a fair value gap. For those of you who don't know about what is fair value gap, there are lots of videos which we define fair value gap. You can watch those videos. Don't forget that. And here you can see the price is coming inside the fair value gap. It's not closing above. It's coming back down. Look at the wick. Look at the wick. How perfectly it's coming back down and it's moving to the downside. And see, this is our last session that we discussed about how perfectly fair value gap is acting as support or resistance. So look at those pink color, how this level is acting as resistance and how the price is pushing and getting rejected from this area to the downside, and at the end is going to this level. We can talk about that also, how it went to that level, but it's not part of this video, okay? But if I want to show you why it has stopped there, because it didn't take that liquidity, but it went inside this 1 hour fair value gap. So that's why this was one of the target profit. Okay, be patient. We will reach to that stage that I'm going to show you how you can choose your target profit, how you can choose your stop losses. So stay tuned for those stuff. Okay, learn topic by topic, step by step. Okay, so now let me just move to the 5-minute chart, and this is the lowest time frame I'm going to show you in this session. So we started from the weekly chart into daily, and then our trading time frame, which was 1 hour chart, and now the 5-minute chart. Okay, this is not allowing me to go to the left side more than this, okay? But here I just want to show you how you can, definitely in the pink chart you can enter into the trade, but if you want to lower your risk and put a stop loss closer to the entry, it means lower risk, higher reward. This is what everyone likes, right? So in this 5-minute chart, you can see we can get a lot of entry based on our concept. For example, here, okay, when we are getting close to this pink line, as we know the direction of the market is bearish, so when we have such a nice price action to the downside, including fair value gap and liquidity void, okay, so here we can see price is pushing to the upside, and then this can be a perfect entry because it's actually retesting this bearish order block. Let me put something to show you exactly how you can enter here at this level. If I want to show you the 5-minute by this color, which actually if you're getting professional, even you don't need this line to make your chart less I mean actually not too many lines, okay, but I'm just putting this line for your information, and you can see this 5-minute bearish order block, how it's coming back up, it's getting retested. This is a perfect area to sell, so sell at 121,800 and we could get out at 120. Okay, so that was about 100 and 80 pips, not bad, right? It's too good actually. This was your second chance. Don't forget, if you missed that entry, this was your second chance. So don't forget that in today's session we learn how properly you can do the top-down analysis, and we use the example of pound dollar in the last week price action. So basically we did the review for last week price action on the pound dollar, okay? And definitely we showed you that our overall bias for pound dollar is bearish in the daily and weekly chart. So any push to the upside can be in terms of some kind of manipulation to look for sell setup. The